Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
The Japanese private capital market has demonstrated remarkable resilience and growth in 2024, defying global trends of sluggishness in venture capital, VC, and private equity, PE, activity. PitchBook's Japan Private Capital Breakdown 2024 report delves into the key trends shaping the Japanese private capital landscape, highlighting the factors driving this robust performance and outlining the challenges and opportunities that lie ahead. Japan Market Update, a transformative year. 2024 has been a year of significant transformation for Japan's economy, marked by a shift away from its decade-long policy of negative interest rates. The central bank's decision to raise rates for the first time since 2007 signals a move towards normalization and has attracted increased interest from foreign investors seeking higher returns. Coupled with corporate governance reforms aimed at boosting growth and a reallocation of capital away from China, Japan has become an increasingly attractive destination for global investors. Despite these positive developments, Japan's GDP growth remains muted, and the yen remains weak against the US dollar. This weakness, however, has created an opportunity for foreign investors, making Japanese assets relatively cheaper and further incentivizing investment. Venture capital, robust deal-making, and growing global ambitions. VC deal-making in Japan has remained robust throughout 2024, with $4.1 billion deployed across 969 deals as of Q3. This strong momentum is expected to continue, with annualized deal value on track to surpass the levels seen in 2022 and 2023. This growth is driven by several factors, including increasing interest from foreign investors. Non-domestic investors have become increasingly active in the Japanese VC market, attracted by the country's improving fundamentals and the potential for higher returns. Active participation of Japanese corporations and CVCs. Corporate venture capital (CVC) firms continue to play a crucial role in the domestic venture ecosystem, providing funding and strategic support to startups. Growing focus on late-stage and venture growth deals. The increasing number of late-stage and venture growth deals indicates a maturing VC ecosystem, with more Japanese startups reaching a stage where they can attract larger investments. One of the key challenges for the Japanese VC market is the historical reliance on domestic markets by Japanese founders. Many startups have focused on providing highly localized solutions, limiting their global appeal. However, this trend is beginning to change, with more founders embracing global ambitions and seeking to expand into international markets. This shift is crucial for the long-term growth of the Japanese VC ecosystem, as it will attract larger investments and drive higher returns. Private equity, record deal activity, and the rise of carve-outs. Japan's PE market is experiencing a surge in activity, with a near-record number of deals announced or closed through Q3 2024. This growth is driven by several factors. Attractive valuations due to a weak yen. The weak yen has made Japanese assets relatively cheaper for foreign buyers, creating an attractive investment opportunity. Corporate governance reforms. Regulatory pressure for corporations to improve capital efficiency has led to an increase in carve-out opportunities for PE firms. Reallocation of capital from China. Global investors are increasingly looking to diversify their investments away from China, and Japan has emerged as a beneficiary of this trend. PE fundraising, however, has been a relatively weak spot in the Japanese market in 2024. Just 9 funds closed through Q3, albeit including 2 of the largest PE vehicles ever closed in the country. This low fundraising activity may be attributed to the global slowdown in PE fundraising and the relatively small size of the Japanese PE market compared to other regions. Exits, resilient performance, and the rise of M&A. VC-backed exits in Japan have remained resilient in 2024, with $2.7 billion of exit value generated across 86 exits through Q3. This performance is on par with the 2020 level and is driven by a combination of factors. Robust IPO market. The Japanese IPO market has remained strong, providing a viable exit route for VC-backed companies. Increasing M&A activity. M&A momentum has picked up in Japan, driven by the need for fund returns, the emergence of M&A advisors specializing in smaller-scale transactions, and the increasing succession needs of SME owners. The median and average time to exit for VC-backed startups in Japan has increased in 2024, reaching the highest levels recorded in the dataset. This trend suggests that Japanese startups are staying private for longer, potentially due to the increasing availability of late-stage venture funding in the regional market. Fundraising, a slowdown amidst global uncertainty. VC fundraising in Japan has experienced a significant slowdown in 2024, with just $2 billion in commitments through Q3. This is the lowest total since 2017 and may be attributed to the global slowdown in VC fundraising and the increased risk aversion among investors. Despite the slowdown, the Japanese government remains keen on attracting foreign investment into the country's VC market. The Japan Investment Corporation, JIC, a government-affiliated investment entity, has been actively investing in both domestic and overseas VC funds, aiming to improve the quality of fund governance and attract foreign capital. Conclusion: a market poised for continued growth. The Japanese private capital market has demonstrated remarkable resilience and growth in 2024, defying global trends of sluggishness in VC and PE activity. This strong performance is driven by several factors, including a supportive regulatory environment, increasing interest from foreign investors, and the emergence of a more mature and globally ambitious startup ecosystem. While challenges remain, such as the relatively small size of the market and the need for continued improvement in corporate governance, the Japanese private capital market is well positioned for continued growth in the years to come. The combination of attractive valuations, robust deal activity, and improving exit opportunities makes Japan an increasingly compelling destination for global investors seeking exposure to the APAC region.